So if I look at the last, COVID gave an opportunity for a lot of people to buy really good businesses at great prices. I think a lot of, in the last 12 months, a lot of the money that was sitting on the sidelines has come in, and we can see the impact of that on the markets. I think the markets have been expecting that there will be a bunch of interest rate cuts this year. And I think they've been expecting that that will continue for a long period of time. So the reality is that interest rates can never go back to what they were, which is zero or near zero, right? So I think the market is a little ahead of, which it generally is, of what the reality on the ground is. I am cautiously optimistic that we will have a soft landing, but I think because of the momentum that people have been seeing and because everybody has the fear of missing out, my concern would be that some sectors are seeing aggressive valuations again. And so I would basically, at least on the public side, ask folks to be a little careful on what to expect.
Is there anything you want to add there, Cyrus?
Well, I spend most of my time in early stage venture capital. And early stage venture capital is kind of linked but also dislocated from the general economy in many ways. But coming out of COVID, as kind of Div was articulating, we saw just ridiculous valuations that made no sense. And a lot of companies that should have never gotten funded got funded. And that created lack of discipline in the market, in the venture world, and reset new expectations for entrepreneurs and the whole entire ecosystem that, you have an idea, it's going to get funded, it's going to go. And it's quite the contrary now. In fact, really good companies are having a hard time getting funded now, ones that should be getting funded, because investors have become much more discerning in how they're allocating capital. One of my favorite quotes is, "Capital is a coward." And the cowardice went away during the COVID time. Became very brave because there was an abundance of it. But I think there's a rationality in terms of the way allocators are allocating capital in early stage venture. And then I'll shift over to many early stage venture related companies their customers are big companies, big corporations. And they've become much more guarded on signing on to new products and services. So the sales cycles are getting much harder. And so it's definitely a much more challenging environment from the early stage side. And now we're lucky that we're having this huge tailwind around AI. If that wasn't happening right now, there wouldn't be a lot of bright spots around a lot of the sort of economic sort of things. So it's sort of balancing some of these other challenges, of which Div is one of the world experts in.
It is and it is not, right? Because if you look at some of the early stage AI companies, you're again seeing that lack of discipline where a 5-people team with an idea may get some insane valuation that has, when you look at the realities of what will happen, it doesn't make any sense. So I think...
You think there's some hype in the cycle then?
I think the hype in the cycle is fine because obviously it's a big topic. Mm-hmm. Obviously, it is a revolution in the sense that everything that we see is going to become a lot more efficient with the addition of AI. And the way I think of it is it's almost the difference between when none of us had personal computers and we did things by hand, and then everyone had personal computers and we got a whole lot more efficient. It didn't mean that the jobs went away. There are as many jobs or more jobs. It didn't mean that that there were calamities that were predicted that by science fiction authors that took place in any form. I think of it as efficiency tools, and in just about everything that we do, we'll get a lot more efficient. And as long as you look at it that way, the opportunity exists. But I think because of the nascent understanding that people have, and the hype cycles that get created around some businesses. So in any of these cycles, if you look at .com 1, I think a lot of the Magnificent Seven, or all of it, came out of there. But at the same time, people lost a lot of money on a lot of businesses. The same thing's going to happen now because it is sort of, at least in platforms in AI, it is sort of a winner takes all, which means the top 3 or 4 companies will get all of the customers and all of the revenue, while the rest that can't scale to that, even if they might have better models, if they can't get the right scale, then they're going to be left behind. So there is going to be a lot of money that is going to find that efficiency, and some will do really well and a lot won't.
ChatGPT was launched at the end of November 2022. You started your latest company 11 months before that. What drew you to be thinking about AI already? And how have you seen it change?
So my company is called AI.tech. So it's and I started that in January 2022, which was before AI became AI as a mass market thing in November with the launch of ChatGPT. I felt like we were at the cusp of being able to create efficiency tools that would significantly improve all systems and all of what we do in a big way, because in my previous company, we used a lot of machine learning. And so what we focus on is one part of AI, which we do more B2B stuff, because GPT or B2C or those transformation models cost significant amounts. I mean, and you can see that with Sam's comment around raising $7 trillion, which obviously is, it's to show that what he thinks is needed. Obviously not going to happen, but in some sense, it is, if you say 7 trillion, then it's a lot easier to raise 100 billion after that, right? And it doesn't seem like a lot. So it's a standard sales sort of a pitch around, hey, I want 7 trillion. Oh, only 100 billion? And that doesn't sound like crazy, right? But I think the opportunity to deploy a lot of that exists, and obviously some of these models and some of these platforms will require a lot of that money. But at the same time, I think as many as, obviously the platform opportunity is only 3 or 4 businesses, but the big opportunity for the rest is because every tool will incorporate a lot of these models, either from the platforms or other parts of it. The opportunity is in the long tail, right? Where you can, with much lower risk, basically be able to bet on businesses that will generate a lot of value. And there, the early movers have an advantage because the early movers will start getting market share as they customize using a lot of AI for specific industries, because then they can make those industries and those sectors a lot more efficient, and the more market share that they gain by customizing for that space, the harder it becomes to compete. So I think those kind of businesses would be much safer from an investor standpoint, where you can get a lot of upside for lower risk.
Speaking of different sectors and how AI interacts with them, Cyrus, a lot of your work focuses on mobility. I was wondering if you could talk about the connection there, how AI feeds into all of this.
It's not as obvious as it is as making pretty pictures with DALL-E for AI and ChatGPT with writing your homework assignments, but AI shows up in a lot of ways in mobility that's going to drastically really change the way we live our lives. And I'll probably give you the example that I am personally most excited about, which is humanoids. And so the work that Tesla is doing with Optimus, there's another company in California called Figure, Boston Dynamics, which is owned by Hyundai. There's another company called 1X, I believe in Sweden, if I'm not mistaken, that OpenAI has invested significantly into, where with the progress that's been made with OpenAI and other sort of big large language models and neural network teaching, you can teach these humanoid robots to do just about anything. And I think people are going to be shocked at how fast this shows up. I mean, I'm talking like this year, next year kind of stuff. And the way we were shocked with how ChatGPT showed up, so imagine that being manifested in the real world, in the physical world, to go pick this up and put it over there and not run into somebody. And so, I mean, you don't have to think very hard about what the possible consequences of that can be, from the labor markets to defense to, your imagination can be pretty big there.
So yes and no, right? Because if you look at the first dog that we saw as a video from Boston Dynamics, that was years ago.
Yeah.
Autonomous cars were supposed to show up years ago. I think most people, I mean, it is human to think that the future is here already. And so we always overestimate the short term and underestimate what will happen in 10 years. So I would say that in 10 years, we'll see some crazy stuff.
I'm willing to bet this time next year at this event,
Yes.
we will be seeing things.
And I won't be surprised that we will see the robot that will do it.
Yeah.
I think that by the time that it gets to production, where it is mass market and it's actually being used, that is always a longer time frame than what people bet. And again, nothing wrong with that. It's look, it's important to show these things as early as possible because then people can identify the possibilities and then figure out how they want to incorporate it as it comes. But a lot of the cool tech that we're seeing is being talked about now for a bit. We will start seeing parts of it come, but it will always be a lot slower to roll out than we imagine in the short term.
I want to have this talk again next year, and we can talk about what has because I've seen a lot recently in the last few months that make me go, oh my God, this is happening real fast, much faster than I would have personally imagined it to be. And so can we?
Yeah, the
organize
pace of
this
progress
talk?
in AI definitely.
Just put a pin in this.
I
so
think
we
we've
come
got
back
it recorded, so we could play a little clip and see who's right next year.
No, I don't know.
I agree.
What is the robot going to do next year?
We'll find out next year.
Okay.
But I think there's even just cleaning the bathroom,
Yes.
right? Like things that we don't necessarily want to do that we have now these humanoid type robots that they're able to learn how to do that now without a whole lot of extra.
But your sense is in a year it could get to the point of it being cost effective to do those
Yeah,
tasks?
most certainly. Yeah, I mean these aren't very expensive. Like the weight of them is only 100 some odd pounds, and the raw materials isn't that much. And it's, this is $20,000-$30,000 worth of stuff, and most of the cost is in the AI training data. And so having access to be able to train these things. And so there's some extraordinary, huge 100, 200, $500 million deals happening as we speak with startups in the space that I'm more hopeful that it's going to happen sooner than expected.
I'm definitely hopeful. Don't get me wrong. I'm just saying from a timing standpoint, we always underestimate it.
You duly noted.
Yeah.
Do you think there's any risk of people being too focused on AI as the next frontier in all this? That there might be big things we're missing by talking too much about AI? Kind of other technologies, other innovations that haven't got as much attention?
I don't think so. I mean, given it clearly is the largest efficiency change that we're going to see, or that we've seen across the last few decades. So in that sense, we might get too focused on specific things like thinking of AI as ChatGPT, when obviously it's a lot larger, and it can be used across everything. But from a size perspective, okay, let me compare it with something. I always felt like we gave blockchain too much hype, and there was no real application. With AI, there is application in everything from day zero. So it's about building to it and getting there. And hence, from an opportunity size perspective, it's a much larger, and it is the largest opportunity as of right now from a tech standpoint, because it goes in everything.
You touched on defense very briefly. Is that something you could talk more about and how?
Yeah, defense is a really interesting topic. Now, do you have an iPhone?
Yes.
Okay, put it up real quick. Almost every single major technology in that iPhone right there was originally paid for by the US government. From the LCD screen originally, from the GPS satellite, from the digital camera. Most people don't know this. The original digital camera was developed for spy satellites to spy on Russia. And that ultimately allowed us to have Instagram, as you go forward. And anyways, I could just go on and on between the DARPA, DOE, and DoD. Over many long period of time, it created a lot of these technologies, primarily driven by war and the threat of war. And a lot of it can be attributed to the Cold War and Russia. Now, what we're seeing again between the Russia, China, US sort of multipolar world is you're seeing a huge influx of Western interest, capital, and focus around defense-related technologies. And I would offer that there is a silver lining in this pain of war, which is we have no idea what great things may come from the innovations that will be created. Just to give you an example, the KC-135, Boeing, the origination of Boeing, most of you probably flew here on a Boeing jet, came because the United States government wanted a air-to-air refueler to fuel intercontinental bombers to drop bombs on Russia. And they've created the KC-135, which became the Boeing 707, which is the same exact tube as the 737 we're flying today.
No, I mean, I agree. The internet came out of a defense project, right? It was a DARPA
The
project.
what?
The internet.
The internet.
Yep.
So let me put it another way. Retail investors do not have the ability to invest in technologies that will take forever to materialize. Governments and institutional investors and sovereign investors have a lot longer time horizon and risk profile and an ability to see as many things and distribute their investments across enough number of things that they can still get a return, but at the same time help all of tech progress. So in that sense, defense is always an important category because a lot of the tech that we see today and that we'll continue to see for the foreseeable future will come initially out of those kind of spends and those kind of budgets.
You mentioned the US government. Are there other countries or economies you think that are capable of?
I think all. I
be
mean,
looking
obviously,
at,
Cyrus is from the US, so he thinks the US government, but all governments need tech and all governments have large budgets around it. And so whether it gets developed in the US or whether it gets developed in Western Europe or whether it gets developed in China or South Korea or wherever else, right, or India, the idea is because because that market is large enough and it's not just one country buying it all, that you can continue to invest and you can find investment dollars that can get a return across all of that budget.
One final question when we have a couple of minutes left. I know you're both very into aviation and flying. Is there anything you'd want to talk about for the year ahead, how you're thinking about that from an investment perspective as well as a personal one?
I'm just waiting for Jetsons to happen.
Okay, well, I can tell you it's happening, and I know you may be more skeptical timing-wise. So I sit on the board of a company called Pivotal, which is an electric vertical takeoff and landing vehicle company, which has developed a vehicle that you can buy today. It can fly about 30, 40 miles, does not require a pilot's license to fly. It's fully electric. It costs you about $4 to fly. And there are about 400 companies in the world today that, $4 per flight. 400 companies in the world today are developing some sort of flying car. You're seeing one of them outside with Joby Aviation. And the way we should think about this Jetsons and flying cars is think about the different things that have wheels, from roller skates to trains, right? Like everything, all these wide range of use cases and technologies that it can use the third dimension. And because of all the converging exponential technologies from electrification to automation to network optimization and comms links and additive manufacturing, you're seeing this big influx of new tech to bring the Jetsons alive today.
And so you're optimistic also from a climate perspective, it sounds like, given the electric side there? Is that
Most certainly. I think I'll just give you a really interesting anecdote. Drone delivery. Okay, that's flying cars, but a much smaller version of it, right? So Walmart, the largest company in the world, has now announced service to 1.8 million consumers in the Dallas-Fort Worth area in partnership with Zipline and Wing. Now, people would typically go get their, whatever it is, a can of soup, or how would they get there right now? They get there in a car. 2,000-pound gas-burning vehicle, go to the store, pick it up, come back, as opposed to a 15-pound drone that consumes effectively no electricity. DoorDash has done 5 billion deliveries. Every one of those deliveries has been either a car or a scooter, or whatever it may be. 90-ish% of them could be done by drone. So you think about how you can take things that are consuming petrol off the road and do it through the sky and do it electrically and do it clean and do it faster. That's pretty good.
I feel like you want to add one.
No, I was just going to say that I think from a climate perspective, I think all investments are moving towards being more friendly anyways. So I think we'll see a lot more of that.
That's great. A great note to end on. Thank you both so much.
Thank you.
Thank you.
Cyrus.